What is the outlook for the real estate market right now? That plus much more on this week's COVID-19 update. Stay tuned. Good day, Toronto. Welcome to another episode of Prime Props TV. So glad you could join me here today. Happy Victoria Day long weekend. I had no idea it was long weekend until Friday when someone told me. So yeah, here we are, long weekend, second long weekend of isolation. I wonder if there'll be fireworks during this pandemic. Interesting. So last week I asked you guys for some questions regarding COVID-19 if you wanted me to answer, and I got quite a few in the email, but a lot of them were very specific to their personal situation. But the general feeling and the questions I got were all fairly similar, and I'm going to go over that in today's episode for you. But before I answer those questions, mainly the ones that where the outlook of the real estate market is going to be, let me give you the quick breakdown of this past week's COVID-19 numbers, okay? So I'm tracking week 11 right now, and you can see the inventory and the sales remain more or less the same, very consistent in Toronto. Again, another minor update you can see on the weeks of inventory, like the ones we've been experiencing in the past months, but nothing out of the ordinary or substantial enough to kind of be like, oh, there's a big difference, right? Nothing crazy. So I'm going to be breezing through these numbers so that if you want to have a look at in-depth look at them, just pause the video and you'll see the numbers, okay? So condos, you can see basically the same thing, a few less sales, but you know, the percentage sold is back to 100%. Towns and semis, numbers are so insignificant as usual, that can't represent anything anyways. But one thing I will note is when I was going through the sold properties, there were a few properties along the Yonge subway line that sold in less than a week, and some even over asking, right? So, you know, back to the whole old real estate adage, location, 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 right? Then you got the detaches, the same thing, a very minor uptick in sales, and that's it. And if you guys want to continue seeing these COVID-19 weekly updates, make sure you guys like the video and subscribe to the PPTO channel, as I'll be getting more videos like this every week during COVID-19 out to you, okay? So thanks so much, appreciate it. Okay, so back to the frequently most asked question. And the most popular question I got was basically, Zhen, where do you see the outlook of the real estate market? And I didn't really talk about it in the past 2 months because there's too many things going on. But in today's video, I won't give you a cop-out answer, and I'm going to give you exactly my thoughts. But keep in mind, these are my opinions and my opinions alone. And I'm in the belief that nobody can predict the market right now, and there's way too many uncertainties. And if someone tells you that they're 100% sure something's going to happen, they're full of you know what, right? Because no one will know. So I will give you my outlook, but there are some assumptions that I'm going to put in, okay? So my real estate outlook is going to be separated into short-term and long-term. And in the short term, let's call it 3 to 12 months or so, I'm fairly pessimistic. However, my outlook for the long-term real estate market is quite optimistic. And let's call long-term like anything a year from now, from today, right? Call it 2021. And let me explain with 3 examples and how they're going to shake out in long-term versus short-term, okay? Now, in these examples, I have one underlying assumption through all of them, and that is COVID-19 will pass. It too shall pass. How long? I have no idea. Vaccine second wave, who knows? But I'm on the assumption that it will pass. So in the example, number one, what I'm going to talk about is the state of the economy. The economy is not really good right now, okay? And companies, large and small, are having a difficult time because of the city's lockdown, right? So those companies who have, and businesses who have savings are kind of hanging on. But those who don't have savings and require consistent revenue to operate are likely to be going bankrupt if they haven't already gone bankrupt already, unfortunately. This is because when there's no velocity of money, meaning money isn't cycling in the economy right now. So obviously companies who need the revenue to survive are gonna go bankrupt in the short term, which is bad, and which means unemployment. However, those companies and businesses who have money to lean back on and survive, or potentially get a bailout from the government, will thrive, or well, not thrive, but like will survive the long term and then make it out to thrive in the long term after this. Because when things like this happen, like massive changes, I believe the market usually rebounds, and with creativity and ingenuity behind it, we'll probably see different ways of making money, okay? And that's what business will do. Now, different industries will pop up and seize the opportunity, and a few of them I'm seeing are kind of like e-learning, drop shipping, or e-commerce. Another one that comes up to mind is like, industrial places turning in their manufacturing into creating protective equipment, right? So businesses that can kind of pivot and change will be able to thrive, and that's what I mean by creativity and ingenuity, okay? So when I'm saying the state of economy, now we go from the business level, shrink it down to the family level, right? This 100% applies to personal people with their personal families as well. So if you have savings right now and you're still employed and you're in survival mode, trying to survive the short term, saving everything you can and cutting costs wherever you can, right? Now, if you're unfortunately unemployed without savings, it's gonna be a rough patch. Now, if you think about where people are going to be financially coming out of the short term, in the 3 to 12 months, those who have survived are going to be able to thrive much quicker in the long term because they have money saved up and that they kept away during the short term. While those who had difficulty in the short term are going to have to play catch up, right? Because they may have to find a job again. They may have to rebuild their savings, right? So that's going to be difficult. This is the same thing for real estate investors. If you're in a position to be investing right now, there's very little competition right now as long as you get the numbers to work and you can position yourself to get ahead. However, if you're behind and you aren't able to invest, you're going to fall behind. And unfortunately, because things like this is how that wealth gap's going to get bigger and bigger, right? Number 2 example. Employment and the buyer confidence. What I mean by this is the employment is obviously a huge component in where the market's going to be. Like with the government handing out about like $25 billion of CERB money in the first month, I suspect there's a decent amount of unemployment, okay? Now, without unemployment, you have very difficulty buying real estate. Until you are employed again, your options are going to be limited. And even if you are employed again, if you need a mortgage, you may have to wait 3 months for the banks to even lend you any money because you have to get out of the probationary period. So in the short term, high unemployment is going to affect the real estate market by removing buyers from the market completely. Okay? Now in the long term, when unemployment is reduced, then this is kind of like, on my assumption, when COVID-19 passes, the companies that are about to start thriving again, start hiring again, or it's going to reduce the unemployment rate and increase the ability for those buyers who have jobs to get mortgages again. Again, it takes that little bit of time, right? So those who are playing catch up, but those who are already kind of surviving right now and can thrive quicker, they're going to be able to access and invest or even buy properties quicker, or even get into the market and increase the market activity. So all of that theory regarding unemployment is the same thing for buyer confidence, right? There's usually a tipping point where the buyer confidence explodes, okay? And we saw this in early 2020 where everyone's like, oh, I need to buy something, and there's no supply, right? So obviously with COVID-19, the buyer confidence has dropped significantly, just like the employment rate. But when the unemployment rate reduces and the scares of COVID-19 passes, it will come back. So again, in the short term, buyer confidence is super low right now. That's why there's also the very low activity and there's going to be less transactions. But when it comes to the long term, it will come back because Ontario's fundamentals are fairly good. And we'll probably see the market pick up back then. But obviously, this is all predicated on COVID-19 passing, right? So surviving the short term and you can thrive in the long term. Number 3, banks versus governments. This one's a little bit more complicated, but I'll do my best to explain it very simply. The government and their goals right now is to stimulate the economy and keep it floating so that in the short term, it can survive, and in the long term, it can thrive without any hiccups, okay? Whereas the banks right now, they're focused on trying to pay out their shareholders in the short term. But they are being pressed by the government. Like their government's like telling them, hey guys, lend more money to the people so that I can keep the population and the velocity of money going. However, the banks are concerned that people who are asking to borrow money right now consider higher risk because of the whole COVID-19 situation, especially those who are unemployed or are about to be in an industry that can be unemployed. So they're more reluctant to lend because it's riskier. So you can see that the two sides have like butting goals in the short term. And while yes, the banks are more liquid right now because the government's buying back a lot of their product, their reluctance to lend is going to reduce the velocity of money, meaning the example of the money circulation is not happening right now. Okay, if that was a little bit complicated, let me try to illustrate this with an example for you. So earlier, a good example of this is the Bank of Canada interest rate, okay, versus the mortgage rates, which is government versus the bank. The Bank of Canada dropped their overnight rate almost 2 months ago to almost 0. Now that interest rate, the overnight rate, affects the mortgage rate, mainly the variable mortgage rate. However, within 2 weeks, the banks changed their mortgage rate back to whatever it was before, despite the interest rate, the overnight rate, coming down to almost 0, effectively making that new mortgage rate what it was before they dropped their 2% rate. So you can see that is kind of the banks and the governments clashing. All that effectively increased in mortgage rates for everyone, and it's kind of like as if there was no discount that went through. And you can see these two large entities are going to be clashing like crazy in the short term, and they're so large that they're going to tip the scales depending on what kind of policies they come up with or what kind of lending rates and criteria. All of this can change quite quickly. Now, another thing to think about is if the government keeps pushing out stimulus money in the short term, it's going to flood the market with lots of money, like we were saying earlier, $25 billion in 1 month. And that money likely isn't being spent right now. So, what I was saying is the small families, the stimulus money that they're getting, they're probably going to be saving it for a rainy day, the short term, and in the long term, when COVID-19 passes, all that saved up money is going to go poof and come out into the market and flood it, which will probably cause inflation. Another policy change that can happen is if the banks decide to change up like their lending criteria for mortgages, right? Making it harder for people to get mortgages, which they've already done in the background, they haven't announced it. But if they change it to more, it will affect the short-term outlook for real estate right now, because real estate is driven by the access to credit. And what I mean by is how much money you can get from the bank, because the bank funds 80% of the mortgages conventionally. However, on the other side, if the government steps in and makes changes to the monetary policy or kind of like off-sea stuff that we saw, they could force the bank's hand. An example is if they remove the stress test, that's going to bring more credit back into the market. Or if they bring back 35-year amortization, that's going to bring back more credit into the market, which is going to stimulate the real estate market on the other side. So you can see the back and forth between these two giants can basically amount to a lot of things happening, and there's no way you can predict it because things could change really quickly, right? So that's kind of what I mean by so many things can happen right now, and it's almost impossible to predict. But I'm just trying to give you my perspective, my opinion on it. And I really think that it's going to be in the short term, it's going to be pain, and the long term will come back and survive. Now, two additional points that could affect the outlook of real estate market that I didn't really go through, but I'll just quickly kind of give you the ideas. Number one, mortgage deferrals. Are they going to be extended if COVID-19 goes past 6 months? Are the banks going to let it happen in the short term because they're losing money? What happens if mortgage deferrals doesn't go past 6 months and COVID-19 doesn't pass? What if it does, right? So a lot of the mortgage deferrals is kind of keeping the real estate market afloat right now. So if COVID-19 ends, the real estate market could resume quite quickly within the mortgage deferral period. But if the mortgage deferral period doesn't go past the 6 months and COVID-19 stays past 6 months, we could be in trouble. The second thing is, what if we get a second wave, right? Nobody knows. Some countries are getting it. I don't know. I'm not going to touch on that topic. But, right now, a lot of the real estate people are thinking that the spring market is going to be pushed into the summer market, right? Which makes summers really hot. But if the second wave is going to come in the fall, which is a fall market, which is another busy season, what's going to happen to that, right? Nobody knows, because we can't predict what's going to happen with COVID-19. So that's what I'm saying. There's a lot of factors moving into it, but ultimately, in the short term, my belief is that we need to survive, and it too will pass. It's going to be rough, but we just need to survive and let it pass. In the long term, when we come out of it, depending on how the economy, how the families survive and the businesses survive, is going to dictate how quickly we can rebound and how quickly we can get back into the long term, where I am very optimistic about the market. Now, one of the other things in this short term, long term is we have to consider how long the short term is going to be, right? Because the longer the short term, the more detrimental the effects is going to be on the market. The government can't ultimately be supporting everything with like stimulus money for that long. So as I said, depending on mortgage deferrals, second waves, all that stuff, it's going to affect how long the short term is going to be. I hope that kind of helps with shedding you a little bit of light on where I think the real estate market is going to be. Ultimately, short term, it's going to suck. Long term, I'm optimistic. Now, I had some other questions regarding the rental market. That was a very common question, but I feel like this video is already kind of long and I'm kind of going on for a bit, so I'll save that for next week. Now, if you are encountering some short-term issues with COVID-19 and real estate world related, I kind of put together a COVID-19 Survive and Thrive guide. I'll put that in the link description below for you guys, and it's going to be free to you, and hopefully it helps, okay? So stay safe, wash your hands, and until next time, your move, your future. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.